Yes, we are live. Hello, everyone, and welcome to our webinar. Thank you all for joining. My name is Olena Gryniuk, and I'm Regional Director for the Central Eastern Europe at the SME Banking Club, and I will be your host today. And today we will talk about BFM Solutions, so Business Financial Management Solutions, and how they can help to streamline relationship with SME customers. And I'm glad to be joined today by Claudio Cungi, Head of Product at Strengths. Hello, Claudio, and welcome.
Hello, everybody. Thanks, Olena. Nice to meet you all.
Yes, thank you for being here and for joining. So before we go to the topic, let me mention some organizational moments. So our webinar is scheduled for 45 minutes. We are recording this webinar, so right after we finish, you will receive the link to the video and the presentations. And in the end of the webinar, we will have time for your questions. So please type your questions into the chat. So let's go to the topic. We've been actually discussing the topic of implementation, value-added services, and beyond banking services for SMEs very often lately. And what we see now in the region, and this is actually based on the SME Banking Club studies that we are doing on the annual basis on the digital services available for SMEs here in the region, is that 30% of the bank, so around 30% of the bank, implemented beyond banking solutions for SMEs, meaning E-invoicing, online accounting, and BFM solutions, which are integrated to the online or mobile banking applications. Here you can see it in the red box. And we consider that this is a beginning of the implementation stage here in the region. What else to mention here is, for example, like to show you some examples here, is that this is a screens from OTP Bank from Hungary, which was the first one in the region that implemented OTP e-biz platform. That was actually the integration of e-invoicing and BFM solution with banking services. So they implemented it 3 years ago and developing this constantly. And this is an example from two Polish banks, PKO BP and ING Bank. These are the screens of the BFM solution and the screen of comparison of income and costs of the customers. So we also noticed here that SMEs started to expect such beyond banking services from the banks, because this actually differentiates banks in their eyes, because like all typical banking operations are digital already. So almost all of the banks implemented in their online and or mobile solutions such standard operations like account history, transactions in local currency, in foreign currency exchange, etc. This was first, and the second thing is that SMEs themselves are not going super fast with the digitalization of their businesses. This is a separate topic for a discussion. So they don't have resources, meaning people and money, for the digitalization, and they actually spend significant time for the non-core business activities in their working hours. For example, if we took the accounting and everything is connected with accounting and invoicing, so last year it was a study of McKinsey that up to 16% of their time SMEs are spending on that. So they expect that banks will help them and will deliver such solutions to them. So this is the state of the play at the moment here in the CE region. And Claudio, I'm passing the word to you. What is your view on that? Yes, and this is your presentation.
Yeah, thanks, Olena. Thanks for the introduction and for showing some figures that actually shows a very good picture, I think, of which is the market trend and the key needs. Let me actually drive you through the presentation. So because actually the question, I think we can address it quite well also throughout the PPT we have here to share. So first of all, thanks for inviting us today. Let me start by telling you something more about Strands. So Strands is actually is a fintech that operates within the financial sector since 10 years yet. So we're quite consolidated in that industry. Think that we actually started working in, we started developing our competences starting from music. So we started developing AI competences actually around music. And then actually we applied that knowledge in the fintech industry circa 10 years ago. And then of course story began and we actually started working on PFM and then moved also in the small business sector developing AI competences. And actually after 10 years we have a consolidated presence all over the world actually with a strong track record of implementations. I would then actually start talking, as you know, today just around small business, and this actually can be focused in our product suite thanks to the BFM, which you actually introduced, and that we are going to talk later, I think, about it. Let me start perhaps by completing, going back to your questions, completing the view, our point of view on what's the industry looking like today and what is the environment actually we're facing of. Our point of view is that we can actually think of 4 key trends we think that are driving the banking sector, the financial service industry, I would say, and that we think have an impact on also the figures that you showed us. And we think that are actually revolutionizing the adoption of new small business tools. We think that 4 are the key drivers that are driving the adoption. The first one is the open banking. As we're going to see, open banking and PSD2 as part of the open banking are reshaping the industry. The competitive arena, I mean, as we're going to see, demand and supply are quite changing. And small business behavior, again, also small business are changing their, say, behavior regarding how they see banking, the way they get towards technology, the way they are getting used in using digital tools. And then technology and AI, meaning also AI has done definitely a big jump ahead, especially in the last 3-4 years, spreading also the adoption of these tools. So starting from the open banking, I think that open banking is one of the things that has mostly changed our way of adopting technology in the financial service, meaning thinking of 3-4 years ago, I think that we were thinking of typically everything bank did was built within the banks. So if banks wanted actually to innovate, what they had to do is they had to innovate in-house or buying software or any, of course, kind of technology and had to implement it in-house. And of course, they had to offer everything through their channels, meaning apps, online banking, or anyway, proprietary channels to serve their customer base. Actually, we are changing a bit this paradigm, as we can see, and we're moving to the right side of the slide, basically. Thanks, I would say, to API is the unusual suspect of this transition, meaning API, which are, I would say, not something that has been invented the last 2 years, but is quite a, let me say, not a frontier technology, has actually supported the transition in having the bank not having to implement everything in-house, but they can integrate third-party technology, not keeping everything on premises. It means that they can integrate with a third-party provider to integrate a new service within that can be offered then through their channels. On the other hand, as we can see through PSD2, it is also allowing APIs to expose some kind of services, like, again, current accounts, of course, payments. These are, of course, the AAS and PIS, and that can then be retrieved by third parties, and that can be aggregated, integrated into third-party apps. This is basically also spreading the concept that bank service can be accessed through third-party apps. So we're actually fragmenting, of course, the way we think the financial service industry. I think this can be also seen from the, let me say, industry perspective. In fact, what we are seeing is that there are new service models that are arising in the industry, and focusing ourselves on Europe, we can see that on one hand, there are challenger banks that are starting arising also in the small business sector with new initiatives that are targeting typically unserved sectors with new kind of proposition, like it is, for instance, Starling, Conto, Penta, or Soldo, for instance, or Holvi as well. Or we can see that there are new propositions like HSBC Kinetic, which is actually a new, I would say, offering service model that is launched by HSBC and that targets only small business. Or we can see that there are fintechs, challenger banks like IDEXA, which is new initiatives that has been launched in Italy, that is using, is exploiting typically only open banking technology to develop a new, I would say, service model. So also the market is showing us that there are typically new kind of service model that are arising throughout Europe. The third fact that we can see is that also the behavior of the small businesses changing. We can see this in four, I would say, key factors. The first one is digital adoption, meaning the usage of digital channel is, I mean, I wouldn't even use the word trend anymore. You know, it's like, it's a must have, you know. So this is state of the art, is that since 4 years ago, now digital is a must. The thing is that also small business are starting, I think, accessing different services also in mobility. So through mobile channel, COVID, meaning, unfortunately, we still have to talk about COVID, but this is a fact, this is a reality, you know. So the way we interact, the way we use digital channel is now a must also for the small business. So getting access to credit lines is now, I mean, I would say something that has become, unfortunately, usual in the small business sector as well. Moreover, unfortunately, I think that COVID affected a wide range of small business sectors, like for sure merchants and other kind of industry that actually have to keep an eye on their cash flow and status of payments. So getting a clear, simple view on finances is something that is even more getting important. Multi-banking, as we said in the open banking part, PSD2 has opened, of course, the possibility to aggregate multi-accounts. This basically supports the fact that there is a need for having a unique aggregation, unique view, that aggregates all the small business finance. Moreover, as we said, the fact of having an increased digital adoption is spreading the fact that there might be a loss of loyalty from the bank's point of view, meaning that the bank, the fact of opening a current account in minutes, in few taps, will likely spread opportunistic behavior from the small business that will likely access credit line just by opening a current account in minutes, not days anymore. The last thing we have to consider is that there are new, I would say, lines of entrepreneurs that are spreading, again throughout Europe. Consider that there are new businesses that are, of course, unfortunately, continue arising. 70% out of these new business are set up by millennials. Millennials have an increasing trend in adopting, of course, digital banking first products. And secondly, they are more willing to experiment new technologies, new service model, new offering that actually, for instance, some years ago were not on the market. The last trend we think we need to take into account is that AI has definitely done a lot of steps ahead in the last 3-4 years. Let us look at this very simple funnel from the upside down perspective. So starting from the aggregation, meaning what is AI? AI starts from the assumption that we need to base all the models on aggregation, meaning you need data. The fact of having now more data, because we said that PSD2 is opening the possibility to aggregate third-party accounts, brings to the side effect that we have even more data than before, because we're not talking one bank, but we're talking about potentially more bank per customer to analyze the data. This brings the fact that we have a massive data set to analyze. So data enrichment, categorization is a must, because we need to analyze, first of all, raw data to extract useful information. And this is where AI comes into the place. So by applying machine learning logics that, of course, allows to recognize useful information in the data set we analyze, we are able to get to the last step, to the funnel, so that we can basically extract information, recognize patterns, identify potential need that the customer might have in the future, so that we are able to target directly the customers with insight-based offering that basically wants to anticipate the customer needs. So before something happens, we are able to detect it and to say a warning, let me say, to the customer. And this is something that I think that we have seen this kind of technology being widely adopted, I would say, in the last 2 years. It's basically also because of AI has somehow, I would say, evolved in the last year. So starting from this kind of picture, what is the BFM doing? So to answer the initial question of Olena, well, let's start from the assumption, who is it for? Well, a BFM should be targeted to people that has, let me say, a destructured finance, typically. So don't think, of course, of a structured company with a structured finance, with a structured administration process, that, of course, I mean, have I would say, are spending also a lot of money to get structured ERP. Let's think of people that are like merchants, freelancers, tax accountants that are supporting freelancers and merchants, but also small businesses. Small businesses that needs to keep a relation with the bank, because it's the bank in the end that is granting credit lines, it's granting payments, it's granting a financial product that an ERP is typically not providing. In this sense, the BFM tries to match what we said in the upper part of this presentation, meaning we're trying to satisfy all the arising needs we are seeing in the market with a simple tool that basically has some basic features, like we base everything on account aggregation, so multi-banking view, categorization that allows to apply then machine learning principles and get predictive insights we're gonna have a look at. And then, of course, financial planning, let me say, features that has to support the everyday let me say, financial planning needs, but with a very, very simple approach. The other thing, the other dimension that we have not, explicitly talked about is electronic invoicing, meaning that, as we're going to see, the finances are made of a small business from a, let me say, very simple point of view, has to be made of the balance sheet, meaning you have your current account, and your current account is typically your balance sheets, meaning this is your inflow and your outflows. So it's the cash flow, and at the end of the year, it's your balance sheet. And on the other side, you have to take into account what's the status of your accounts receivable, what's the status of your payment. And this is where invoicing has to come in place. Typically, a strong trend that we are seeing spreading all over Europe and then all over the world, I would say, is electronic invoicing, meaning making invoicing digital is digitalizing somehow the operations, because you do not have to write down the invoice and issue it. You have it digitalized. So invoicing provider are digitalizing operation also for small business in this sense. The bank has to take into account this, let me say, trend, because of course the small business customer that is adopting an invoicing provider to monitor and to issue invoices is somehow watching on its finances, on its ERP, more than on its banking account. So what we are trying to do also with the business finance manager is trying to find a way to give the small business customer an holistic view on its finances, giving the bank the possibility to keeping, of course, on one hand, the transactional flow, and on the other hand, the electronic invoicing flow, everything in one place, as we're going to see. So, how it's typical journey of a small business customer, how does it look like? So the idea is that I, as a small business customer, would like to see everything 360-degree view on my finances. It means that I want to land on my dashboard, and I want to be able to see multi-banking account view, a multi-banking account view that shows me how much cash am I absorbing, how much cash am I generating. So basically, a simple view on cash flows in the past. So to see how I generated cash, but how also I am able to forecast cash flow. So to see if this is my track record, basically, how am I proceeding into the future? And this is one of the first thing that the small business customer has to see. It's his ability of creating or absorbing cash, and how this is affecting basically the current account balance. The second thing we need to be able to see on the dashboard is, of course, sort of financial planning features, meaning in a simple view, it's a financial calendar. The third thing, as we said, is the invoicing. So the third thing I think I want to be able to see is, okay, this is my cash flow. This is actually doing good, but I need to see which kind of invoices I still have to pay, or I still have to be paid from my clients, because of course finances are strongly affected of what's your working capital. And this is of course the other thing. Moving on to a deeper analysis, I can of course have a deeper look at my financial calendar. So the idea is that every day I will have account and receivable, both in the past but also in the future, because this is where AI comes into play, into the game, meaning that AI allows to recognize recurrent patterns into the past and project them into the future. So thinking of a retail customer like me, it could be something like, I have recurrent expenses like Netflix every month. Thinking of a small business customer, these kind of behaviors are actually spreading. Think of salaries and wages he has to pay every month. Think of gas bills, utilities, of course, also financial expenses, because there are interest on credit lines he has to pay. So if we are able to look at this behavior in the past, project it into the future, you will be able to see that, of course, on one view, it affects your future cash flows. And if you have it on your financial calendar, you're able to see when you're going to have to pay what on all your aggregated accounts again. And then, as we said, electronic invoicing. How does it work? I mean, we have to assume that the customer is already using one of the invoicing provider that the market is offering. So we, as Strands and as bank, have to give the customer, the small business customer, the possibility to aggregate and retrieve invoices from his existing invoicing provider. So what we have built in our BFM is a view that allows to aggregate your invoicing provider or drag and drop your invoices from an XLS file. So to allow a simple view, as you see in this picture, of your invoices. The second thing we can do and we have to do is to reconcile the status of the invoice with what we see in our online banking. So it basically means that we need to take into account that, an invoice has a status that strictly depends, of course, on if we have paid the invoice, we have not paid the invoice. So also to cluster, let me say, how many invoices we have paid, we have not paid. Then we need to think that we, in 2021, all the journeys we think should be also used through mobile, meaning we really believe that the journeys has to be mobile first, but we are aware that this kind of experience we just showed will typically require people sitting in front of their computer, looking at their finances. So we believe that we have to think everything mobile first, but that desktop experience might be really a dominant view in this kind of sector. So which are the benefits of adopting this kind of experience? Well, first thing is that this is an easy and fast tool that has to allow the small business to have a simple interaction with his bank that has to, of course, spread engagement, past and forecasting cash flow. Meaning the BFM has to be able to give an holistic view, but also an exact view on what is going to be the trend of the small business customer. Holistic view, aggregated view of third-party accounts, because the small business customers likely having more than one current account. Financial education, meaning finance easy for everyone, is a must. And the BFM has the first aim to give a simple view on its finances, but it has to be understandable. It has not the aim to be a complex ERP. ERP will likely still exist, but BFM has to be the complementary view that has to be very simple and that has to allow small business customer to understand very easy and very quick their finances. Benefits for the bank. Well, the idea is that we need to support banks in retaining. We said that loyalty will likely decrease. So BFM is a way to request the consent to aggregate third-party accounts, because it allows you to give a simple view on your finances. These will give the small business customer, a second reason to use the bank interface as its primary interface. Cross-selling. If the bank is able to detect typical behavior of the small business customer, it's also able to target instant notifications that will likely prevent any kind of I would say an abnormal behavior. So to target the specific product in the right time when the customer needs it. So the BFM is a perfect tool that allows also to monetize the investments of implementing it. Dataset enrichment, as we said, everything is based on AI. It also allows to categorize raw data, have data enrichment on top of it, categorize third-party data that can, of course, allow, as we said, to gather information that allows cross-selling. Acquisition. As we saw, there are new propositions arising in the market that basically put new tools at the very heart. This also is used by new challenger banks, by new proposition to do acquisition, meaning there are new customers, new small business arising, and they are looking, they're hungry for new digital and tools. And the BFM is, of course, one of these tools. We can see also that, the BFM I showed you is something that is widely adopted on the market and is widely adopted by large institutions such as Novo Banco. HSBC, the one I talked to you about, HSBC Kinetic in particular, is powered by Strands. They have a BFM. But there are also new propositions like the one carried on by Mediocredito Centrale in Italy that are using the BFM to power also new initiatives separated from their core proposition. So they're using the BFM to spread new initiatives. So that's all from my side. Thanks for listening. And I saw there were some chats and questions.
Yes, thank you, Claudio. We have many questions, so I will start reading them from the very beginning. Okay, so the first question was from Jose. Can you define what processes and data does BFM Solutions cover? I think we answered this question during the presentation, but Claudio, if you can comment here additionally, you're welcome.
So which process? Actually, it covers a wide range of process. Here we could be more specific and deep diving it, but it would require, I would say, quite a long time. I would say key processes that are covered are, of course, from, let me say, after the onboarding and recognition part, which is in charge, of course, of the bank. After it, what we take care of is basically after the onboarding, so data retrieval, which can be real time, which can be batch, categorization. Then, of course, all the UI is, of course, taken charge by the BFM. Account aggregation, so aggregation of third parties, and so on and so forth, I would say.
Yes, and as an SME, I can say that the top functionality of the BFM is this cash flow projection. I think this is a really crucial thing in this solution. Comment from Mohammed. We have a digital loan for SMEs in Egypt. Congratulations on that. This is a really important fact and an important stage of accessing loans and funding by SMEs. Congrats on that. Does the application, another question from Jose, does the application has an ETL tool to capture business data, or the bank depends on SMEs loading the information? If the latter, how do you assure the quality of the data?
Okay, yeah, the application has both ETL. So if you refer to batch processes, we typically use ETL ingestion and or RTE processes, meaning real-time ingestion. These typically depends on which to use. Sorry, depends on several factors. First of all, it's the bank deciding which kind of architecture better suits to its processes. So I would say, first of all, it's a bank decision. Secondly, it depends which kind of processes. So there are real-time processes and there are batch processes. Typically, massive ingestions go, of course, through batch processes, while then, let me see, other kind of processes go through real-time. How do we assure the quality of the data? It's not really clear now which quality of the data we're referring to.
I mean, in terms if the SMEs are uploading information by themselves. This was like to this part
No,
of that.
okay. The data we ingest is coming directly from the bank, meaning it's, let me say, not the, so transactions, let me rephrase it. Transactions are coming directly from the bank. So it's not, let me say, the small business providing the transactions, it's the bank providing the transaction. On top of it, we apply categorization, which is, of course, based on machine learning principles. How do we assure the quality of machine learning principles? It's, of course, validated by the bank. So it has a fine tuning at the beginning of each project, which is then, of course, validated by the bank. And it, of course, thanks to machine learning principle, it gains in quality over time. So, of course, the more data we ingest, the better is going to be the accuracy.
Mm-hmm. And here is additional question to this that you were answering right now from Jose. What about cash transactions? So how to take them into account in the BFM?
Fair point. So we also give the possibility of being the user, so the small business user, adding cash transaction, meaning there are transactions that are not, let me say, um, that are not going through the
To the
banking
bank?
services. Exactly. So we give the, of course, the possibility to track these transactions, to add manual, let me say, input, applying description, category, and reconciling eventually payments and invoices on top of it.
Yeah. So anyway, if even the customers are paying by cash, but it should be, if it is not a gray economy, okay, then the invoice anyway should be issued, and then this is can be counted in the BFM as information from the invoice, not from the banking transaction, let's say. But depends. I mean, if this is a gray economy, this is other I think other situation, and yeah. Okay, we have a comment from Chris. Just a second, I will find them about the open banking. Yes, Chris is saying that open banking is not ready in Asia. Now, would this impact the aggregator to collect data? Well, I think it will come anyway, but Claudio. So what would be the impact the aggregator to collect data if there are no open banking?
Well, yeah, I'm trying to understand, meaning that we actually, so open banking is basically reviewing, okay, the way we are accessing data, okay, and it's actually, I would say, an iterative process, okay. The PSD2 has started 1 year ago, and the way we actually are accessing open APIs is actually changing now throughout time. From our side, as, let me say, operator of this industry, we are actually, so the way we access data is not actually changing, but we are, of course, gaining a lot of experience thanks to these 1-2 years in the way we actually categorize data, thanks to, of course, the experience gained in these last 2 years.
Yeah, but if I can comment here also, what we saw here, for example, in the CE region is that before PSD2, meaning that banks are obliged to open APIs to third parties. Then before there's the integrations were done. I mean, if, for example, banks and some companies or fintechs are agreed on partnership, then they can also agree on opening API to each other. That's why, I mean, on the contractual agreement basement, let's say. So this also can, I mean, this worked before the
consider that again. Before, this is right point. If I can comment it further, before PSD2, there were aggregators that were doing account aggregation, but not through open APIs, but via, for instance, also screen scraping. So what actually PSD2 did was harmonizing and regulating the access to the data, taking into account also privacy, security, and the fact that it is who access the data, meaning the third-party providers, have to comply to regulation.
Yes.
That this is something that wasn't done before, but from what I know, I mean, it's screen scraping is going on, was going on since the early 20. I mean, the first evidences I have on the market are aggregators at the beginning of this century that were doing screen scraping. Then, of course, I saw also a question about data privacy.
Yeah,
I mean,
actually, I was yeah.
yeah, I mean, we can jump on the next one. So everything has to be done according to data privacy. I mean, there's no way you can escape this data protection. Sorry, data privacy, meaning that this strictly depends on the way we offer our service. There are two ways. On premises, it means that we can offer everything at the customer site. It means that we implement our software into the bank's legacy, regardless if it is a cloud or legacies typically. And here, of course, we have to comply to the banks that, of course, is adopting and satisfying the regulation requirement, okay? Regulatory requirement in terms of GDPR and privacy. Typically, we are not treating data. It's not, of course, in preliminary phases to tune the categorizations, but we're not looking at the customer data. Then in software as a service, of course, there are, of course, more deeper regulation that we have to go through in order to comply in offering software as a service offering. Furthermore, there is, as I said right before, PSD2 is forcing third-party providers complying with any kind of regulation. So both GDPR and PSD2, that implies also SCA, is forcing us, of course, in complying every kind of security standard.
Yes, we have actually here a question from Carmela regarding SaaS model. So what is your strategy about this? I saw there are poor technical details in the developer portal, and there are no code snippet or open source repository. What your company can offer more than the available open banking API?
Okay, so we actually have, as I said, both on-premise and software as a service, SaaS offering. We believe in open banking. We believe in SaaS offering. We have invested within the last years in developing a SaaS offering that we have now available throughout Europe. But we also believe, let me say, that there are still institutions that likely want to adopt an on-premise approach. This is why, as of today, we keep both offering, meaning on-premise and SaaS. Regarding developer portal, I think that we are about to roll out a new developer portal within the year. So to, let me say, have a more in-line approach with the software as a service, which implies to have, let me say, a more structured developer portal with more information. It has to be created, let me say, by developers for developers, as I read in some developer portals. So we are strongly working on it, also improving the documentation type. Regarding the last part of the questions, what your company can offer more than the available open banking API? Well, meaning open banking API, I think, are PSD2 APIs, meaning we offer, on one hand, the account aggregation opportunity, meaning these the PSD2 APIs. So we aggregate account with our own certificates or with the bank's certificate. On top of it, we have APIs that allows to do categorization and a lot of features, which are the BFM features, meaning we have seen the financial calendar, the invoicing, the cash flow predictions, the insight generation, and so on and so forth. So we are actually, I would say, a very wide range of APIs and of features. Everything is available via APIs or thanks to SDKs. So we have widgets to more easily at least access the API services.
Mm-hmm. And another question from Carmela is, what type of AI are you developing? Do you already have model ready, or you need to adapt or create from the scratch for every customer?
This is a good point, meaning we develop, the first thing we have developed, again, on top, let me say it, is the baseline, is the categorization. So we have, first of all, developed a categorization engine that can be scaled both for a small business customer as for retail customer, and can be applied into several countries, meaning several languages. This is again at the baseline. On top of it, we have developed an engine that allows to recognize, again, recurrent pattern and predicting cash flows and income and outflows. Sorry. This allows then to have another engine that basically allows to catch these behaviors and send notifications to the end user and or to the bank, showing that which are the behaviors and which is the next best actions that will happen to that customer. Let me do an example. If you have a cash flow forecast that is actually saying that you're going to have a liquidity risk, so you might experience a negative turnover in the next 5 days, you're going to get a notification that tells you that in 5 days you will have a liquidity risk. If you have this liquidity risk, you could actually prevent today this liquidity risk by transferring, for instance, your money from one current account, which is positive, to the one that is negative. So preventing, let me say, the access to a credit line. This insight is sent to the user on one side. On the other side, it is sent to the bank that can, let me say, take into account all these insights on a CRM level, so to get better decision, informed decision, and getting, let me say, new information on the customer. This is typically which are the models that we can talk about. We have now. These are models that we have out of the box. That if we, of course, apply an on-prem approach, we need a tuning of this model at the bank with the bank's data models, of course.
Mm-hmm. Yes, and actually will be my part here. I would like to ask you, what actually does it take from the bank to cooperate with you? How does this cooperation look like? And I will take also here a part of Carmela's questions. How do you how are you different from the competition, from your competitors? What is your competitive advantage as a provider?
Yes. Well, let me start from this last question, perhaps. How do we differ? Well, I think that our value proposition is, first of all, our product suite is quite wide, meaning we offer from account aggregation to machine learning to BFM to AI. So the first thing I would say is we have a one-stop shop experience for the bank. This is, I think, the first advantage. We can offer the whole package to the bank. There's no need to go to a third party, to several providers to build a unique service. I think this is the first big value I see in our proposition. The second value I see is that we have a tailored small business customer offering, which is something that is an advantage. And we have very deep AI models, which I think is a big advantage relationship to the competitor, at least the competition I see. I think we have done a very good job in the AI part, which is, in my opinion, where it's actually everything moving in the next years. Because as also Olena said, cash flow predictions is one of the key features. This is based on AI in the end. If we are able to catch everything, to send insights, to create a simple interaction with the customer, telling him, "Hey, watch out! This is your cash flow. This is what is going to happen next week. This is what's going to happen in 2 months from now." We are telling the customer where to look at, and we are not expecting him to open the transaction list, look transaction after transaction, seeing what's happening. So this is what I think it's the core value of this solution. It's in the AI more than in our features. How do we cooperate with banks? Well, it depends, of course, from bank to bank. Typically, we try to have a turnkey approach, meaning we offer full support during pre-sales, meaning solution design, trying to understand which are the customer requirement till the go live and post go live support. So we try to be, of course, next to the customer in every phase of the life cycle of the project. After this, we're also now getting deeper in relation with the banks, trying also to catch, let me say, single requirements we can satisfy also as a product team.
Mm-hmm. Okay, so we're a bit staying more longer here, but we would like to answer all the questions that we have here in the chat. So I will quickly go to the next one. So Mohammed asks how banks can help entrepreneurs. Well, in a lot of ways, and actually today we're discussing how banks can help implementing BFM, so helping SMEs to manage their finance and actually get access to financing, to loans and factoring, etc. And I would switch to the next one. So how can a bank leverage all this data proactively to convert the customer to a credit customer, so to offer a loan or factoring? I would suggest as well here.
Well, yeah, let's do a simple use case, perhaps. Let's imagine that, again, the cash flow forecasting, I think it fits well. Imagine that I, as a customer, will likely be predicted that in 5 days, again, I will go short in liquidity. As I said also before, if I imagine that that I have also my invoicing provider connected, I can see from my invoicing provider that I have an invoice from my customer that is not paid yet, and it is of 10,000 euro. Those 10,000 euro, if I had them today, I could actually avoid a liquidity problem without the need of asking a credit line to my bank. If the banks would know this, would recognize these two key events, which is of course, on one hand, the liquidity need, and on the other side, the fact that I have potential liquidity, the bank could then suggest me, hey, you might run out of cash in 5 days. Why don't you just anticipate, you ask for cash by getting a factoring with that invoices you still have there. So imagine a drag and drop experience where you access your BFM, see this notification, you drag and drop the invoice into to the bank by telling them, hey, just give me liquidity and I give you these invoices. This actually is a pretty straight experience, very simple, that we think can be very effective, and it can be also implemented very quick. It's if, of course, the bank has this kind of products. I hope I answered.
Yes, exactly. I actually like this very much. I mean, if banks are doing this, I think this is a very good strategy for the proactive and relevant sales of loans, let's say, and factoring, because, you know, if you see in the cash flow that you will be as negative or in red saldo in 5 days, then yes, and the next step, the bank should like offer you something, either, you know, to change maybe some even, I don't know, this could be from the customer side to change timing of the payments of some maybe invoices just to prolong them, or take or finance invoices by factoring, or get the overdraft, or connect to relationship manager, you know, to find some individual solution maybe for the bigger SMEs. Okay, so the next questions from Rita will also combine into one. So when you have account aggregation and the BFM and multiple users in the same company, how do you deal with the multiple consent issue? And also, within the one company have the same authorization? If there, I mean, is it covered that not all the users have the same access on the same authorization to see different accounts? How does it work?
Okay, if I understand well, the question is there is one user that is aggregating, one user of a company that is aggregating 3 accounts, whatever, from more than one bank. This user is allowing, I know it's the multiple consent, multiple user in the same company. Well, because there are 2 use cases. Typically, the first one is I, as a user, I'm aggregating multiple accounts, and for this, I need to follow the SCA, meaning if there is a multi-factor authentication, that implies that more user has to approve the consent, there is no escape, meaning each user has to has to give the authorization. Then there is the multi-user, meaning I, as a customer, can authorize more users in seeing specific informations. And so I, as an administrative user, will grant the access to those users in accessing some features. But this is, again, if this was the first case, there's of course no real escape, meaning that everyone has to accept the concept on the device that is recognized.
Okay. And the last question that we will answer today is from Jose. Do you have financial literacy seminars for training to motivate SMEs to report all their activity. Underreporting and informality is the same of the game in emerging markets to avoid high taxes.
This is a very nice point, meaning that we typically tend to do B2B2C marketing activities in this sense, meaning that we tend to give our inputs to the banks that adopt our services, that are then the one that tend to have the direct relation with the customer. What does it mean? That we rely on the banks in order to give this kind of inputs, this kind of suggestion that are then used and applied by them. This is typically what we do for this kind of, let me say, change management process.
Yes, and actually many banks also here in the region in general have these trainings on financial literacy or management, business management for SMEs in their package of their value-added services or beyond banking services for SMEs to support actually. Okay, so I think we covered all the questions, and the very last information that I would like to share with all our attendees before we end the webinar is that taking this opportunity, I would like to announce that exactly in 2 weeks, on April 23, we will have a roundtable during which we will discuss in a very detail the invoicing and BFM Solutions. So this will be a smaller, let's say, closed event planned for 4 hours. During which Claudio will present a demo of the BFM solution, and also we will have 2 banks from Hungary, OTP Bank, which I mentioned today and was the first one in the region to implement e-invoicing and BFM, and Budapest Bank. So they will present their cases and share their experience in such implementations. So this roundtable is planned for 4 hours. So this will be a really in-depth and detailed discussions. Everybody will have an access to the microphone and cameras, so everybody can equally participate in the discussion, share experience, and ask questions, of course. And if you are interested in such a detailed discussion, let me invite you to join. So generally, such meetings are free for our members, and for non-members we charge €300. But attention, now we decided to raffle, the tickets and give the opportunity for the most interested of you to go into the details, to take part in this roundtable for free. So if you're willing to participate in this discussion, so please type right now in the chat a word yes, and we will register you. So, and as I mentioned, so exactly in 2 weeks, we will have the opportunity to discuss these questions in more details. So like we can have half a minute to wait while you will check your calendars and inform us. Also, of course, you can inform us by email after the webinar today. So, and you will have the opportunity to register for this roundtable. I see somebody is typing. Okay, so thank you for your attention and for your questions. And Claudio, for your contribution. I think it is a very important topic that we covered today. So as I mentioned to everybody, that we will distribute all the presentations used today and the video right after we finish. So you will receive all the materials here. And thank you for staying with us during an hour. Thank you. And see you next time online. Goodbye.
Goodbye.
Thank you.